The latest news shows that interest rates have once again dropped. At the same time, you have a lot of home buyers out there believing that home prices are going to pull back in the future and they're going to be able to purchase a home for a lot less money. So the question is, should you buy now or should you wait for lower prices in the future? In today's video, we're actually going to dive into a couple of examples. We're going to show you what it looks like to purchase a home today based on today's interest rates. And then we're going to fast forward a couple of years when interest rates potentially rise and show you what that might look like to give you a full comparison so that you know exactly what you're waiting for if you're one of those people sitting on the sidelines. As a real estate agent for nearly 20 years, I've had a lot of clients in my career try to pick the top and the bottoms in market. Everyone wants to buy low and sell high, buy low, however you want to look at it. And this time is no different. I've had a lot of clients sell property over the years, waiting to get back into the housing market, thinking that prices were going to pull back, only to get left behind and never have been able to purchase. But in today's video, we're going to dive into a couple of examples, as I mentioned, to give you real numbers, as to what is happening now versus what might be happening in the future. Now, many of us know that there's no crystal ball out there. None of us know exactly how the future is going to play out. But one thing that we do know is that currently there's a low supply of homes, there's high buyer demand, and a lot of that is being driven by low interest rates. Now, one of the things that we know that has to happen in the future at some point is a rise in interest rates. Rates cannot stay low forever, and the Fed has more or less come out and predicted they're going to start raising rates in 2023. So as rates start to rise, chances are buyer demand is going to pull back some, giving supply room to breathe, which means an increase in the number of homes out there. As inventory increases, if buyer demand doesn't stay with it, you're likely to see some pullback in pricing. Well, once you have that pullback in pricing and rising interest rates, that's probably the best time to buy a house, right? Well, let's take a look at the two examples that I'm going to give you today. Now, understand, these are both guesses, right? We don't know where house prices are going to go. We don't know how far they're going to pull back, if they're going to pull back at all. We don't know how high interest rates are going to rise and how far will they go. But what we do know is at some point, something has to give. And I want to show you a couple of examples today because everyone talks about prices. But in my experience, home buyers, they live in the payment, not the price. What does that mean? That means every single month they're worried about how much they have to pay on their monthly mortgage statement. They're not necessarily worried about the value of their home on a monthly basis. As long as they can continue to make their monthly payment, then all is good. The difference in now versus say 2006, 2007, 2008, the housing crash, if you will, is a lot of people's payments started adjusting because they had adjustable rate mortgages. They also were going from interest only loans to fully amortizing loans. So while they were comfortable with their payments started adjusting to a higher number that they could no longer afford, and because values had decreased, they weren't in a position to refinance and or sell their property because they no longer had equity. This time is completely different, as I mentioned, but I wanted to throw a reminder out there that most people are less worried about what they pay for a home and more worried about how much they pay per month for that home. Now, the two examples we're going to dive into today are purchasing a $350,000 home today versus what that property might be in the future, as well as a $750,000 home today versus our prediction for the future. Now, we're going to assume that you have 20% down. We're also going to assume for this video that you have good credit. We're not going to talk about anything other than the mortgage payment and the property taxes because those are, the most substantial part of someone's monthly payment. The homeowner's insurance, any HOA, any of that stuff is irrelevant as far as I'm concerned for this video. I just want to show you what it looks like on paper with regards to purchasing now versus maybe waiting into the future. So if we took a $350,000 home today and we put 20% down, we would be financing a mortgage of $280,000. We're going to use a 2.75% interest rate today. We're going to assume that's a 30-year fixed, which gives us a monthly payment of $1,143.08. We're going to say our property taxes are 1.1% of the purchase price, which is pretty typical of Southern California, which gives us an amount of $320.83, which gives us a total mortgage payment of $1,463. Now let's fast forward a couple of years. Let's say it's 2023 now. It's a year and a half or so, 2 years from today, and home prices have dropped. Let's say that $350,000 home is now $300,000. That's a, 14% drop in price? And we're going to assume that interest rates have also gone up as predicted. And we're going to say rates now are somewhere around 4.5%. Why 4.5%? Because interest rates have fluctuated, between 3 and 4% for the last year or so, dipping under 3% several times, which is where we are now, but they've never really creeped above that 4% level. And during that whole time, buyer demand stayed high, things kept moving. So I think in order for the market to really shift, you've got to get rates up into the 4%, mid 4s, maybe high 4% range. Now, while I actually don't believe this is going to happen anytime soon, I'm using it for our numbers here. Now, let's say that $300,000 home, you're also going to put 20% down. That is $60,000, which means that you're now financing $240,000. We're going to say that interest rate, again, as I mentioned, is 4.5%, financed over 30 years, which gives you a monthly payment of $1,216.04. Those property taxes based off 1.1% are now $275, which gives you a total mortgage payment of $1,491. So that is $28 higher in 2023 based on this example than buying now. Well, you might say, well, Jeb, that's exactly what I was talking about. You've proven my point. I'm going to pay less for that property in a year and a half, 2 years. Understood. But what have you lost during that time? Have properties continued to appreciate over that 2-year period? Did they go up another 5%, maybe 10% over that 2-year period? So that $350,000 home now became $380,000, $390,000, maybe $400,000 home. How much money did you not write off because you didn't have a mortgage? The property taxes, the mortgage interest deduction that you have on your taxes. Now, I'm not here telling you that you need to buy a house, but I am here telling you that you need to think of it from all sides and stop trying to pick a top in the market. But let's move on. Let's talk about a $750,000 home now to show you exactly what that would look like. So the $750,000 home, again, 20% down is $150,000, which means that you're financing $600,000 on that home. We're going to again say that you have a 2.75% interest rate, which means a mortgage payment of $2,449.45. Your property taxes at 1.1%, $687.50. Gives you a mortgage payment of $3,136.95. Now let's assume that $750,000 home in a couple of years became $650,000, but rates again went up to 4.5%. Well, that $650,000, putting 20% down, you're now financing $520,000. At 4%, your payment is $2,634.76. You also have your property taxes at $595.83, which gives you a payment of $3,230.60. Again, you're paying nearly $100 more, even with a $100,000 less home. Now, let's address the question here of, is it better to buy a home that is a higher price at a lower rate like today, or potentially wait into the future when you have lower prices but higher interest rates? The best case, in my opinion, is buying the lower priced house at the higher interest rate, because you can't change the price at which you purchase a home, but you can always change the interest rate if interest rates were to come back down. Now you might say again, Jeb, you're proving my point, right? It makes more sense to buy that lower priced home at a higher interest rate, and that's why I'm going to wait. Well, you're assuming that 1, prices are going to pull back. 2, you're assuming that that interest rate is only going to go to 4.5% in this example, right? you're also assuming that the market doesn't continue to appreciate over the next couple of years, and that pullback isn't from a higher price in the future. The thing that I'm trying to get across to you is that if you're interested in buying a house, if the payment makes sense to you, you have money in the bank, it's the right time of your life to do it, I wouldn't, worry about what the future holds. Because in my opinion, those are the people that get stuck never buying a property because they always think that there's, light at the end of the tunnel. There's a better opportunity to come in the future. And what I've seen is a lot of those people that end up selling their property and waiting never end up rebuying because the market gets away from them. They always think that it's going to continue to pull back and they never jump in. So if you're one of those people out there considering whether now is the right time or whether you should wait, run the numbers, see if it makes sense for you to do it now. Now, if it financially doesn't make sense for you, you don't have the down payment, you can't afford the mortgage, you can't qualify for the mortgage, then that's one thing. But if you're here trying to pick the top or the bottom, I think that is where, a lot of people get hurt and miss opportunities trying to nail the top or the bottom in a market. At the end of the day, you have to decide what's right for you. But I do believe there are some changes happening in the housing market over the next couple of months that could help home buyers get into the market. If you want that information, check out this video here. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.